subscribers, hope you guys are having a great day out there. As always, if you're new here, I am Jeremy. This is a financial education channel, and today I'm going to share with you guys 5 stocks that I want to buy very badly in 2020. I got this video idea from Ale, from Ale's World of Stocks. I should be showing you a screenshot of his video right there, and I thought this was a great idea for a video, and I want to share with you guys 5 stocks that I want to buy in 2020, but the valuations have to come down on these particular 5 stocks a little bit for me to start buying them, because if the valuations were already low enough on these 5 stocks, I would have already started buying these 5 stocks. And these 5 stocks, most of them have a lot of growth ahead of them, and I'm super excited about their business models, their management teams, their income statements, balance sheets, pretty much everything across the board in relation to these companies. Just the valuations are a little too high for me to start buying, because there are a lot of stocks you come across in the stock market that you'll love everything about the business, you'll love the management team, and you're like, I could make a lot of money on the stock, but it's about getting it at the right valuation, right? Everything's for sale in life, but you gotta pay the right price. So hope you guys really enjoy me sharing these 5 stocks with you here today. Smash a thumbs up if you really enjoy me sharing this video, and let's start getting into this. All right, first stock up of the 5 is good old AMZN. Okay, Amazon stock is the first one of these 5. I would love to start buying some Amazon stock. I mean, do I even have to talk about this one? Like, it's just an obvious choice. Okay, they're the dominant player in e-commerce. We're talking about nearly half of the market share goes to Amazon when it comes to e-commerce, okay? E-commerce is not just the now, e-commerce is the future, and e-commerce is going to continue to grow. And who's by far and away the biggest player in e-commerce with the dominant market share? It is Amazon. Like, it's just unbelievable how much of the US e-commerce sales they get, okay? Never mind, they continue to expand around the world, and they're just becoming a bigger and bigger player in e-commerce, which will become a very profitable business over time for them. In my opinion, when it comes to like consumers' thoughts around like a brand where they're going to shop the most, Amazon's the future. Like, Amazon's completely the future when it comes to shopping. You think about, prior to like this whole e-commerce revolution, it really was Walmart. Walmart was the dominant player when it came to like, physical retail. And now if we're talking about virtual retail, it's all about Amazon in the future. They're going to be the biggest player, and they're going to get the dominant market share. They already have the dominant market share, in my opinion. That's just going to continue on, okay? So obviously for that side of the business, really excited. But then you look at Amazon Web Services. They're by far and away the biggest player in cloud, and I see no reason why they would give up that type of market share. They got well over a 30% market share in terms of their Amazon Web Services cloud business. So that's super exciting. So you're looking at, the dominant player in e-commerce. You're looking at, a huge cloud player, the biggest cloud player in the world by far and away. And never mind that, like, Amazon has a ton of other businesses we could get into in today's video. The Whole Foods business, Twitch, Ring, they own so many businesses, it's really incredible. But if you're really buying into the stock, you're really buying for the e-commerce play and for the cloud play, okay? Those are the 2 main things. Also, they make a ton of advertising money on Amazon.com, okay? So it's just an unbelievable business model. And you can look, the income statement is a thing of beauty, okay? Look at the revenue growth over the past few years. 2016, they do $135 billion. This latest year, 2018, they do $232 billion. We'll see what numbers come out at the end of this year. They could do $270 billion. They could do $290 billion. But the numbers are going to be incredible, needless to say, okay? And then look at the earnings per share growth, okay? From $5.01 in 2016 to over $20 a share in EPS in 2018. So the numbers are just amazing. Now the EPS growth is slowing a bit, okay? They're expected to do $27.26 next year, okay? So that is a slowing of the EPS growth, but still phenomenal growth there. And then if you look at expected sales growth, they're expected to grow, nearly 20% for years to go in the future. So if you look at Amazon, I really look at this company as, easy money if the valuation was right, just because it's such a big company. They're going to continue to get much bigger in future years, much more profitable, way more revenue coming in. And, with Bezos at the helm there, they're just going to continue to expand the business, okay? It's very easy from that perspective, but the valuation's not right, okay? The valuation does not excite me. You're looking at a forward P in this company of 6 65. Yes, they still have nice EPS growth and they will in future years, but 65 for Forward P, it's just too high for me at the end of the day. It's just too high. I would love to buy this business. I would love to build a massive position in this stock, you know, a six-figure plus position in Amazon, but I'm not going to build a six-figure plus position when, you know, the valuation on this is just really high. 65 Forward P for a company that is not like they're going to continue to 2x and 3x their EPS year by year. You would expect that, and that's just not the situation for Amazon. Valuation has come down. If it came down, I'm gladly a buyer of this company, okay? Stock number 2 up is Google McDougal. I would love to own some Google stock, okay? I mean, Google, you know, what can you say about Google? They obviously are the dominant player in search. So they make all that advertising money off search, unbelievably profitable business. Advertising is just so profitable, it's ridiculous, okay? They're also a big player in the cloud. If we looked at those charts on, you know, the biggest cloud players, Google is one of the biggest cloud players out there, okay? So that's obviously a great business for them. They own YouTube, which now has a valuation, I think, approaching $200 billion, a YouTube valuation now. Like, YouTube's amazing. The ad rates continue to go up on YouTube. More and more people continue to watch YouTube and for longer periods of time. So that all bodes well for YouTube. They obviously own Android, which is the dominant OS when it comes to smartphones and whatnot. And Google also has a lot of other businesses that are going for it as well. So Google, super exciting stock, a growth beast, a very consistent company, the type of company that continues to beat numbers, continues to, you know, raise revenue over time and profits and all those sorts of things. You look at the balance sheet, it's just disgusting, okay? It's just disgusting. Look at this balance sheet. Have you ever seen a balance sheet like this? $16+ billion in cash sitting around, over $105 billion in short-term investments, okay? Add those numbers together, you're over $120 billion between the cash and the short-term investments. Those numbers are just silly. So you add in the amazing business models that will continue to grow for Google, you add in a ridiculous balance sheet, and you can see why someone like myself would love to build a big position in a stock like Google. But like Amazon, the valuation I'm just not that excited for, okay? Forward P on this one of 24. And while I wouldn't say that's like overvalued by any stretch of the imagination, at the end of the day, when I look at Google, Google is like the older brother of Facebook, okay? In terms of like, it's more mature business. They're gonna continue to grow, but not grow as much as somebody like a Facebook. And if I think about like, if I could buy Facebook stock, you know, obviously Facebook's my biggest position, but if I could buy more Facebook today, or just start a position in Google, when I look at Facebook, we're talking about I could pick up Facebook here today for a Forward P of 20. So I'm getting a lower valuation on something like a Facebook, when Facebook will likely well outgrow Google over the next 5 to 10 years. So if I'm just looking at this, I'm saying, you know, I can't put my money in Google, because if I'm putting my money in Google, in my opinion, it's just silly. I need to be putting more money in Facebook, because I'm just going to get a company that will outgrow Google over time and at a lower valuation. So, you know, Google, the valuation just has to come down a bit. If it came down, you know, maybe to a 20 Forward P, then it gets more interesting, right? Because then it's kind of neck and neck with something like Facebook. And then I can say, well, I could diversify some wealth, have, you know, some Facebook stock over here, have some Google stock. I'm playing both the biggest players in advertising, something like that. So Google really interests me. Love to build a massive position in it. Valuation needs to just come down a bit, okay? Stock number 3 of the 5 is a company not many of you guys will probably know, okay? Ticker symbol TXRH, and this one's called Texas Roadhouse, okay? This is a small restaurant chain, and small is, you know, relative, because we were just talking about Amazon and Google, okay? So it's actually, you know, a decently big restaurant chain, but, you know, a super small market cap company compared to those other ones. Texas Roadhouse serves things like ribs, steaks, all those sorts of things. Unbelievable value you get at Texas Roadhouse. Really good quality food, but for an extraordinary value. Like, you can go there and pay like $10, $12 and get like an entree and 2 unbelievable sides, you know, like a salad, you know, like a loaded baked potato and things like that. You know, very affordable, a great experience when you go to the Roadhouse, and generally they're always packed, okay? I love the business model, so well run, such a well run restaurant, like one of the most well run restaurant chains probably in the United States of America, okay? It's incredible. And then they have this other restaurant brand that they're growing around the United States right now. It's called Bubba's 33, and they're known for like pizza, burgers, wings, and things like that. I think that business line has an extraordinary opportunity to continue to expand around the United States. It's a very small one, especially in relation to Texas Roadhouse. Texas Roadhouse is much more built out than something like this Bubba's 33. So they have, a decade plus of growing that brand. And also they could still add a lot of Texas Roadhouse locations over time. So the business model I love, management team, everything about it, I just love, okay? It's a growing brand, okay? So revenue expected to grow 11+% this year, another 7.5% in 2020. You look at a year ago EPS, 220. This year is expected to come in at 237, and next year is expected to do 258 as far as earnings per share. So we got a business here that is a consistent grower, and I love a business like that, as a consistent grower. Also pays a dividend yield of over 2% on this one, okay? So I get to have my money in the stock, make 2+% on my money. Very well run chain. I love it. And, a lot of expansion opportunity, but here we go again with the valuation. Almost a 23 forward P on this stock. And so if I'm looking at something like a Texas Roadhouse, man, I love so much about that business. I don't mind, paying a bit of a premium for a business that's super well run and has nice growth like Texas Roadhouse. But we are still talking about a restaurant chain here, and I have to pay a 23 forward P. For me, that's just a bit much, okay? I mean, anything under 20, and I'm very comfortable paying for a business model like Texas Roadhouse. But when we're talking about nearly a 23 on a restaurant chain, at the end of the day, I just can't pay that price point. I need it to come down a bit. This stock drops, 10, 15, 20%. Now I'm very interested in the stock. I probably start buying it, but here I just can't, guys. But I'm very excited about that one. I hope to buy that stock in 2020. I think it would be a phenomenal stock to add a big position in, okay? Coming in at stock number 4 of the 5 stocks I want to buy in 2020 is Caterpillar. So Caterpillar, I mean, they're the biggest player when it comes to machinery, all right? You need to build something, you're going to go to Caterpillar, okay? You need an articulated truck. You need an asphalt paver. You need a backhoe. Okay, you need a backhoe, you're going to Caterpillar, all right? What about a compactor? You want a compactor? You're going to Caterpillar, okay? You want a dozer? I'll give you a dozer, okay? I'm giving you a Caterpillar dozer. You want a drill? You want a hydraulic mining shovel? What about an excavator or a forest machine? How about a motor grader, okay? You want any of those? You're going to Caterpillar at the end of the day, okay? They're not the only player when it comes to these type of products, but they're by far and away the biggest player in the United States and worldwide when it comes to these type of products. So it's just a business model that's not going anywhere. As long as things need to be built, whether we're talking about houses, whether we're talking about commercial real estate, whether we're talking about cities, infrastructure, anything across the board, you need Caterpillar equipment to build that stuff. So it's just a business model that's phenomenal, very profitable company, okay? And here's kind of the deal with Cat, okay? Cat, great business, very consistent as we talked about, but there's a great saying I have in relation to Caterpillar, and the bottom line is if you're getting the stock at a trailing P or a forward P of 11, you're getting a great deal on this business over the long term. However, right now we're looking, close to 14 as far as the trailing P and the forward P, which is a bit much for a business like Caterpillar. Anytime it hits 11 on a forward P or current P, I'm getting a good deal on this business. When we're talking about it gets up to 13, 14, 15, it's not such a good deal, okay? So yeah, that's just kind of Caterpillar. That's generally where it trades at. And generally, anytime you can get at 11 or below on a current or forward P, you're generally just getting a really good deal on the company. And those are times, you kind of want to load up. You can make that dividend money on the stock, and you likely get good capital appreciation. But this is not the type of stock that usually trades at, forward Ps of 20s or current Ps of 20s or something like that, because it is just one of those business models that growth will always be limited because there's only so many machines you can serve out there. It's not like there's unlimited growth like some other stocks out there, okay? But I absolutely love that one. I would love to buy that one. And the last stock of the bunch, stock number 5 of 5, is Activision Blizzard, ticker symbol ACTI. And Activision Blizzard is essentially a video game company at the end of the day, okay? They own unbelievable franchises that many of you guys will know whether you're a gamer or not a gamer, okay? Call of Duty, World of Warcraft, Hearthstone, Overwatch, Diablo, StarCraft, Candy Crush, Bubble Witch, Farm Heroes, all those type of titles. Whether you're a gamer or not, you've probably heard of some of those. They're just unbelievable unbelievably popular games, all right? If we look at the audience reach, we're looking at monthly active users just on the Activision side of about 37 million. Then on the Blizzard side, you got about 32 million monthly active users. And on the King side, 258 million monthly active users for a total of about 327 million monthly active users of their different products, which is phenomenal because that means they have attention, okay? They have huge attention because these games are super popular, people come back and play them, so which means they can release new titles in the future that a lot of folks will end up buying or be interested in, okay? So that's phenomenal news for Activision. Great franchises, great titles, and you're not a one-hit wonder. They own a ton of super popular franchises around the world, okay? You look at the balance sheet for Activision Blizzard stock, and it's a very, very good balance sheet, okay? We're looking at $4.68 billion in cash and investments, and even if you take out the debt, we're still at a place where it's basically a $2 billion positive net cash number for Activision Blizzard, okay? Very exciting. Now, the other thing I like about Activision Blizzard, and why this is probably the stock I'm closest to buying right now, is if you look at this business, it's turning from basically a business that was in decline to now it's going to start heating up again, okay? So this current year, they're expected to have revenues go down about 12%. However, next year, 2020, revenues are expected to climb again about 9%. And you look at a year ago, EPS, 260, 222 expecting this year, supposed to get up to 251 next year. So the business is kind of in a turnaround play, not in the turnaround in the sense of like they were done or something like that. It's just, you know, things are trending the wrong way, and now they got things looking like they're going to trend the right way. I think the new Call of Duty Modern Warfare is going to do very, very well in the market. So I'm looking at this company, and it's gotten much more interesting. Valuation is still a little bit too high for me. We're looking at a forward P on this one of about 21.6, which if I buy Activision Blizzard, I'm very close to doing it, but I need it under a 20. I need that forward P under a 20 for a company like this, and they got a ton of exciting things going around the franchising model, live events and things like that, and as well as like leagues in the future. So Activision Blizzard, definitely a stock I'm very, very interested in. I would love to have in 2020. Just need that valuation to come down a little more, okay? But all 5 of those stocks I would love to buy in 2020. I just need the valuations to get right. Those valuations get right, I will be a buyer of those stocks because I believe in all 5 of those companies a lot over the long term. So hope you guys enjoyed this video. As always, let me know if you own any of these 5 stocks, and let me know in that comment section if you want to buy any of these 5 stocks. I would love to hear from you guys as always. Also, my private stock market membership group, that is going to be linked down there in the description. If you're interested in joining that and learning directly from me, go ahead and check out that. The link is in the description. Thank you for watching. Have a great day.